We've seen an incredible amount of growth in the technology space over the last couple of years, and that change will continue to unfold at a rapid pace as we move into the pre-pandemic era, and we all kind of try to figure out this new normal together. Now, for investors, awareness of these trends is not only important for understanding how emerging technology will disrupt and shape our world, but they also help in identifying new opportunities for growth and which businesses are well positioned to take advantage of all those changes. Now, joining me to talk about all of this is Amy Webb. She's the founder and CEO of the Future Today Institute, which recently released their highly anticipated tech trends report for 2022. And Amy, it's so great to speak with you again. It's always interesting and thought-provoking to talk to you. And, we're now in the 50th year of this publication. This year, you looked at over 600 trends and signals. And I was very interested by the theme of reperception that you talked about, and certainly looking at the tech industry and looking at tech stocks, there's definitely been a reperception in the market of that whole area. So I'm wondering if you can just talk a little bit about that idea and kind of where you see tech in the current moment.
Sure. Thank you so much for having me. It's always great to talk to you. I feel like we have terrifically smart conversations. So I don't know, would people call what's happening right now reperception or a correction? I think it depends on who you talk to. But in my field, when we talk about reperception, this is the act of noticing the white spaces. So what typically happens is people are looking for what's obvious. These are the obvious companies, what feels like the obvious trends, even though they may not be actual trends. This is what tends to guide investment. It guides decisions for thematic investors. It's guiding some of that idea. And unfortunately, we miss all of the other things that are coming down the pipeline. So it's the white space that you want to explore. The data are still there. The facts are still there. You're just not noticing them. And a lot of the trend report this year is focused on that concept of reperception, which makes sense. So much of the world has changed so fast that signals are coming from everywhere. And so our job in the present is to make sense of all of this new data and try to sort of see the bigger picture.
It's so great. And your approach, I feel like, melds so well with our approach to looking at the market, reading the data, not trying to predict the future. And I kind of want to get into some of the trends that you highlight. And I think one of the big ones, and certainly one of the ones we've heard a lot about, is the Metaverse and Web3. Of course, that's gotten a lot of buzz because of Facebook's pivot, and they're now known as Meta. So can you talk a little bit about that trend and what you kind of see as the big takeaway in that area?
Absolutely. So we don't actually characterize the metaverse itself as a trend. It's sort of a broad category that's sort of an umbrella for different technologies that are in the process of being developed. Because honestly, let's be real here. The metaverse is a concept. It's an idea. It isn't itself a technology that's fully functioning or anywhere close to being mature. So what are we really talking about? We're talking about the emergence of what's called extended reality. So this is where the digital world and the physical world intersect. If you're wearing a Fitbit device or an Apple Watch, you're wearing a form of extended reality. And I think we're going to see a lot of that going forward. We looked at some data a couple of weeks ago showing the adoption of smart peripherals. So these are smart devices, and it's a hockey stick. The adoption rate on smart watches is far faster than the adoption rate was for mobile devices, which, by the way, are either plateauing or on a decline, depending on whose data you're looking at. So the metaverse is a place where reperception matters a lot because everybody's super distracted right now by NFT collectibles and new ways to invest. What everybody's missing is the basic infrastructure. And honestly, that's what matters right now. It's the picks and shovels, not the cartoon avatars so much.
Yeah, and I want to talk a little bit about that infrastructure and a couple of the big building blocks that I think our audience is interested in, which of course is crypto and the blockchain. Now, we've seen crypto has gotten a little bit more legitimacy, but it's also kind of really run into a rough patch here the last couple of months. So can you talk a little bit about that area and how you see the infrastructure and how this all really kind of blends together into Web3?
Yeah. So what's interesting is we do a lot of work in financial services, and the reactions that we get from the community that's in banking, that's in financial services, is pretty bearish. A lot of them just don't see crypto ever emerging from the edge to the mainstream. They don't see use cases, where stablecoins or CBDCs really become, commonplace. And I understand that, because given where we are today, I mean, honestly, personally, I was trying to buy some Ether, honestly, a couple of hours ago in a new wallet, and I just gave up. It was like an hour. It was something I was doing in between meetings. And I finally was just like, this is insane. I'm a fairly competent person when it comes to this stuff, and I can't get this to work. And I gave up, and I may or may not ever come back to it. So I think part of the challenge here is, even though that was a rough experience for me, I still think that we're going to start to create value and create programmable money and exchange things in new ways, which means that this market will be volatile, but isn't entirely going away. Does that mean I'm throwing all my money into Ether or Bitcoin at the moment? No, or Dogecoin. But it does mean that what I'm doing is really carefully studying what that market looks like as it's evolving. And I think that's something, again, that people miss when we're talking about blockchains, whether those are public or private, and what they enable and unlock, like smart contracts and new forms of governance in the form of a DAO, for example. That opens up really interesting opportunities, whether we're talking about preventing counterfeits or proving validity on a luxury item that you've purchased, or making it easier for open source software to flourish and potentially, in some ways earn revenue. It really changes the game in so many different ways. So I'm pretty excited about, some of these blockchain projects that are early on, some of the DAOs projects, and some of the research. The volatility of Ether, of Tether, of Bitcoin, I think it's going to take a while before all of that shakes out.
Yeah, and you talked about the picks and shovels of supporting all this and this idea of a decentralized web. And of course, as more of this stuff comes online, it's a massive amount of data that really has to be dealt with here. Can you talk a little bit more about maybe some of these other ancillary technologies that people should be keeping an eye on? I'm thinking of things like computer chips, cybersecurity, all these other issues that are going to play into this as this technology really develops and evolves.
Yeah, I think those are really smart connections that you're making, because you're right. There are so many different pieces to this, whether we're talking about a browser and using a browser to access a wallet in order to process process something.
I have my MetaMask password stored in so many different places. I can't even tell.
That's right. So there's like half a dozen browsers. There's that technology. There's semiconductor technology, which is required for the compute. Some products that we own have many chips, not just one. And speed matters, as everybody knows in this field. So there's sort of a constellation of enabling technologies that we really want to be paying very careful attention to, in part because they help support this next iteration of the web, but also because geopolitics and regulation is going to play a pretty significant role in their development. We all know that the semiconductor industry is based in Taiwan. And while Taiwan has promised to set up shop, one of the companies, the main company there in the United States, it's going to take a couple of years for all of that to come online. China is making provocative public acts, and if something happens where we get cut off from the semiconductor, from the chip supply, or the chip supply itself is cut off for some reason, that creates a debilitating ripple effect. I mean, that could throw the global economy into, an immediate depression, which would be pretty horrific. So I think keeping a careful eye on geopolitics, and trying to read between the lines, is going to be super important going forward. And also what's happening in the EU. So related to data, over the past 2 months, the EU has passed some of the world's most stringent data policy and data regulations, with the express intent to make it harder for companies like Google and Meta to have unfettered access to consumer data. Now, from a consumer's point of view, that may be good, but from a business point of view, that's going to pose some new challenges. And again, I think that there are ways to innovate, and there are definitely clear paths forward that make sure that people make money and consumer data is still protected, but it's going to require some challenging short-term decisions.
Right. And I feel like a component to all of this that, also has kind of gotten a lot of attention over the last few years is this idea of sustainability and sustainable investing. I know your report also kind of looks at that area and ESG, and it's become more popular. More companies are reporting these metrics, but we've also kind of seen a little bit of blowback recently based on comments made by Elon Musk recently. But this idea, this question, is this really efficient and does this really work? So I'm curious to see like what your research found in that area, and what are some of the themes in the space of sustainable or ESG investing.
Right. So I think one of the trickiest problems in this space is developing a set of metrics and then proving out the metrics. So saying that you are dedicated to sustainability as an organization is much easier than developing a rubric of some kind and having the data to support that you're actually doing that, right? And making it measurable. So I think that's one area that so many companies are really struggling with. Also because, getting a new policy, if you're a huge organization, enacting something new is going to take time to trickle through the company. In some ways, getting the thing passed, right? Getting a new process and showing that you're making good faith efforts in that process, that's monumental. But we tend not to measure that, right? What gets measured is the output on the other end. And I think that for some companies, it's making them feel a little helpless. But the fact remains that we have some climate issues that are increasingly becoming untenable. And that doesn't just have to do with everyday life. It also has to do with how we do business. We're about to enter one of the most volatile hurricane seasons on the East Coast of the United States that we've had in a very long time. That's going to impact shipping. It's going to impact some, it's probably going to impact the grid. It's going to impact, the internet. So there's sort of more of a need for companies to do some of this planning and to really think through how can they hedge against some of the climate issues that are coming. So obviously one way to do that is to create less of an impact, which means cutting emissions and curbing excessive use of things or cutting down on plastics. But the other piece of this is, are there other ways to think about this? So one section of our report this year is pretty controversial. I know because we've gotten a lot of email about it, but it has to do with geoengineering. And this is intentionally manipulating the environment in order to mitigate climate issues. China has already done this. So earlier, China seeded the clouds to make it rain, literally, ahead of a big CCP sort of government celebration in Beijing. And the purpose was to clear out smog. So this has been done, but they didn't exactly like knock on Pakistan's door or India's door to say, hey, by the way, we're going to tinker with the clouds and the moisture level. Are you guys cool with that? So this is one of the challenges. And that is that there is technology that potentially works. There's a bunch of it, dropping iron deposits in the ocean, engineering different types of plants to suck more CO2 out of the air. There's a lot. But this is going to require sort of multinational science and technology acts, not to mention protocols to really monitor all of this technology. And unfortunately, we're just not there yet, even though the science and the tech is.
Yeah, and we've hit upon some of the big themes in your report. And I just want to wrap up, what's the big key takeaway that you have here for investors, and where can they go to read more about all the amazing research and trends that you cover?
Thanks. So we're living in a VUCA world. VUCA is an acronym. It's a 4-letter acronym that stands for volatility, uncertainty, complexity, and ambiguity. And we always are dealing with various degrees of each of those attributes, but in this present moment of time, all 4 of those are on a sort of high gear. And as everybody who's an investor knows, that means that right now it can be challenging to figure out where to make those investments, how to make decisions. Even a quant fund, even somebody who's messing with algorithms, like the algorithms are going to have to get tinkered with too. So we're living in a challenging period. There's vast amounts of economic uncertainty, policy uncertainty, depending on who you talk to, stagflation, recession, everything's going to be okay. So I think the trick here is to slow down time. And we started talking about reperception. That's where I'll end. You have to work harder right now to see the bigger picture, to look for the white space, to explore what's there, and to really have the discipline to make smart decisions incrementally. That can be tricky to do because we are also living in a continual state of FOMO, another 4-letter acronym, fear of missing out. So I think there's so much hype, there's so much change, there's so much happening. This is about having very steady nerves and being willing to take a longer view. To do that, download our trend report. So you can go to our website, which is futuretodayinstitute.com. And if you go to the trends section, we have 14 trend reports covering an array of different topics that are all available online for you to download, read, share with your colleagues, and hopefully make smarter decisions with.
Well, Amy, I just want to thank you so much for your time. It's always a pleasure to speak with you, and we really appreciate it.
Likewise, thank you so much.
And you can head on over to investors.com to read all of our technology coverage. For Investors Business Daily, I'm Alexis Garcia.